As a whole, we're seeing money being deployed, whether it's into real estate or whether it's into investment accounts, or it all kind of depends on the client. We've got clients that are super bullish on the market. We've got some clients that would prefer not to be in the market at all. We're cautiously optimistic.
I have Travis Krueger with me here today. So Travis is the owner of quite a few different ventures here in Sioux Falls. So why don't you go through some of the things you guys are doing right now?
Sounds good. Well, I commend you on pronouncing the last name right. It's Krueger. Known Kyle for about 15 years, and I still don't know if it's Eberts or Everts, so I just say whatever, and he usually answers.
Exactly.
But yeah, I've got the Swenson Wealth Management, kind of a full-service financial planning firm here in Sioux Falls. Kind of tailored to that is the Skyline capital entity. We're specialized in real estate development, lands, townhomes, multifamilies. So use that for our clients that are trying to diversify outside of the mutual funds, stocks, bonds, kind of more of the traditional type planning. So a lot of our clients like the idea of investing in that stuff. They don't want to be landlords. They don't want to put up with the pain of owning the real estate. So
yeah. So on the Swenson Wealth side, pretty standard financial services on the equity side and bonds, things like that. Go a little deeper into what you guys are selling or looking at there.
Yeah, so we clear most of our assets through Charles Schwab. Kind of cater to, we get the question all the time, what's your niche market? Who's your niche clientele? Which we go a lot of different financial planning events and meetings, and everybody's always kind of got a niche. We only cater to the clientele that's, doctors or lawyers or this certain threshold. We're really kind of across the board. So anybody that's just starting off, that's, buying term life insurance to protect a young family, 529s, allocating 401ks, all the way up to the people that are at or near retirement. Most of their wealth is built up inside of the 401ks, and now they're trying to generate an income plan and figure out how to make that money work for them.
Yeah.
So, into estate planning, wills, trust, succession planning for businesses, farm families and stuff like that, trying to get those assets down to the next generation in the most tax efficient manner.
Are you doing a lot with insurance or more on the equity side?
Probably more on the equity side at this stage of the game. Our insurance cases now, we're not doing quite as many of the term policies and the smaller policies like that. Most of our insurance, so like life insurance, long-term care insurance, catered to like the higher net worth people. We're trying to use it as a tool for equalization amongst kids in the business, kids not in the business, potential estate tax exposure down the road. So
yeah. What are you seeing in Sioux Falls right now? Are you seeing a lot of money on the sidelines, or are people spending? Is it loosening up? Or?
Yeah, I think Sioux Falls, we've always kind of been, I would say, in this little pocket, right? Like Sioux Falls is just such a unique community where we just continue to grow. We got great leadership that supports the growth and that. So I think as a whole, we're seeing money being deployed, whether it's into real estate or whether it's into investment accounts, or it all kind of depends on the client. We've got clients that are super bullish on the market. We've got some clients that would prefer not to be in the market at all. So the nice part about being independent is if somebody wants a 2-year 5% or a 3-year 5.75, we can go that route.
That sounds sweet. How do you feel the market is right now? What are you seeing with interest rates? What are you seeing with the stock market?
Yeah, so we're cautiously optimistic. Right now, obviously, the biggest thing I think is if you can kind of weed through the noise, if you can just get away from all the noise. And unfortunately, with social media and our phones and our pockets in front of our face at all times, it's just hard to get away from some of that stuff. So we spend a lot of time looking at what's the PE ratio of companies, what's their price to earnings. And for years, a lot of our analysts have said, hey, everybody kind of thinks, well, we're getting high values, this thing can't continue to climb. And we always just kind of revert back to the earnings. And what we're seeing after these first quarter earnings is we're seeing that these companies are reporting earnings that are supporting their stock price. So we've been a little bit more selective in some of our stocks that we're picking. But I think all in all, it's at the end of the day, it's the market, right? And that's what we continue to remind people, hey, is it time to maybe trim some off, move it over into some stuff with some guarantees? And that just goes back to what's right for the client, right? And that doesn't necessarily mean age. Some people say, well, if I'm 70 years old, I can't have any exposure to the stock market. If your portfolio allows it or your income plan allows it, we've got clients that are late 70s, 80s that are running 80% equities because they can afford to, and they're starting to do that generational planning and more invested for the next generation. So
using proprietary managers then, or you kind of flow out to the market, or how does that work?
So we can use proprietary managers. So we kind of use a hybrid of both.
You do?
We do have a full-fledged money management team that's all they do. So when I'm sitting around here with you on a Thursday and we're hanging out, we've got somebody that's in our that's sitting behind the computers that are managing the portfolios for the clients.
Gotcha. How about on the Skyline side? That's what it's called, correct? So
Correct.
Go a little more into detail on what that looks like.
Yeah, so kind of early on in my career, it's the cool part about this job is you get to surround yourself with some pretty successful people. And, I was looking at clients' portfolios and looking at what they'd invested in. So real estate's always been attractive to me. I've always kind of been drawn to it. Started kind of dabbling around in it. And then obviously when 2008 hit, I kind of felt like, what a great opportunity and it's time to start dabbling into it. So I have some great mentors, some great guys that have been around the block that I've just reached out to and really kind of started just building some spec houses with a guy.
Gotcha.
Wanted to kind of learn the business and started building some spec houses with a guy. Started with that. And then as I got a little bit more comfortable with it and decided that I wanted to open it up to a lot of clients. So that was just something I was hearing from a lot of clients. We love the idea of investing in real estate. We love Sioux Falls market. We just don't want to be landlords.
Yeah.
So what I did is I reached out to Blake and Brady Hyde at Empire Companies. I've known Blake for 24 years, I guess, already.
Guys,
and I was watching what those guys were doing with the bigger scaled projects, and they were hitting some efficiencies of scale with the bigger projects. And we kind of started with a smaller project, about 34 twin homes, partnered up with a couple guys on those, and we've just kind of continued to grow it. I think we're up to about 1,100 units right now. Got some land development, got some land under contract. So
nice.
Sioux Falls has been a great market for that, and we think it's going to continue.
So you're putting together funds, I have to assume, and then minimums and such?
Yep. So we'll do syndications, depending on the fund. Typically our minimum investment size is $50,000.
Okay.
Class A, Class B, my two partners and I, Blake and Brady, are the ones that go on the loan. So again, my clients say, hey, we like investing in real estate, but we don't like the idea of going on bank loans at this stage of our life or ever, right? So we go on the bank loans, structure them as a Class A, hit a preferred or priority dividend for those guys.
Perfect.
And they've got some equity on the backside.
How do you feel about rates? Do we think the Fed has some maneuvering to do there? Or you think they'll hold pretty steady? I mean, the economy's good.
Yeah.
I don't know what they would expect the economy to do better, but it doesn't seem overcooked by any means. It feels like it's running a really good ship right now.
Yeah, I don't envy anybody in the Fed, I can tell you
no
that.
doubt.
They've got some hard decisions that they've got to make here.
And a president that's up their butt.
The new chairman of the Fed's going to have to probably stand his ground. And I mean, it's no secret that Trump and Powell never saw eye to eye. So when his chair is over, there's going to be a lot of pressure from the new guy coming in. And I'm assuming Trump's going to be thumping on him to cut these rates. But, you get an inflation report like we got yesterday or Tuesday. And I just don't see how they can come in and get aggressive with cutting these rates without causing inflation to turn around and spike.
Yeah. Well, anything else you're seeing in the market right now that you want to go over?
No, we're cautiously optimistic. Appreciate you having me on. Love watching your guys' business grow. Obviously, we got a great friendship, and it's just good to have guys like you that we can bounce stuff off of. And appreciate you having me on.
That's fun. We'll have to go out and play some golf, huh?
You don't want to see me golf. And I've seen you golf. I barely want to see you golf.
Or we'll have a couple cocktails.
All right, deal.